Hello traders, Gary Wagner here, approximately 10:30 in Honolulu. It is Monday, the 10th day of October, and this is the daily report for gold. We have a strong surge in the precious metals markets. Gold, silver, platinum, palladium are all up in nice 2% higher ranges on the day. The stock market is trading higher. Interesting day indeed. Currently, we have gold trading up around $37, as you can see, in the spot month trading at 1674.72, and in the December 1677.30. We have gone right back to what I consider to be a fairly critical area of resistance, and we're going to talk about that first. Let me go ahead and pull up our 1440-minute chart, and you can see what I'm talking about here. When we take a look at this market, we have 1681. That's the 71% retracement of this rather large retracement starting back at the beginning of the year. And as you can see, when the market has come to this area, it has stalled. Now, it's stalled in a couple of occasions, and we're going to take a look at it with a couple of different time frames. But you can see right in here and in here where the market did have highs in that area but was unable to take them out. Where you really get a good feel for the resistance that we have right now is in a 60-minute chart. This is a 60-minute December contract to gold. And as you can see, we've got multiple times where this market has actually gone and tried to test that area. And as you can see, we are right back at that resistance area once again. Now, what does that mean? Obviously, if it cannot take this area out, it's going to be resistance, and we're probably going to go back and test some lower prices. However, if we can form a base above this area, then it's really off to the races, because as you can see in terms of real resistance, that next level that we're going to see doesn't really come in till about 1760, and we can see that better on a daily chart. Once again, you can see the different areas that we're talking about. Now, what I mean by 1760 in terms of resistance, all I've done is put a couple of horizontal lines up, 1750, approximately 1760. And here's what you'll see, and this is what I find interesting, and that is, as this market came down, you had your big drop right in this area. You also had that gap that it filled before. That was 1750 right in that area. And if you notice, you get good support right in here and right in here, which really tells me on a technical basis, if this market's able to break above the 80 and it moves up, this is really the next level. It's got pretty much clean sailing to run right back through 1700. So that's why, traders, I want to be very cautious here, but at the same time, we want to be cognizant of the fact that if we do get a breakout, we're going to get a nice breakout, a sizable breakout to the upside. And traders, I apologize. The gap is right in here in the 1600s, not the 17. And it has already gone, after filling it, it's gone back through this gap, as you can see. We're looking at a weekly chart. This is that gap that we were talking about right here. So that gap has in fact been filled, and we are now trading above that. But the nice thing when we take a look at this from a weekly standpoint and realize it's only Monday, traders, is that we have this nice formation, a nice white candle moving up off of this doji. It is a variation off the Three River Morning Star now. But what I also like is the fact that it's going back to, I believe, test this upper level here. And once again, that's around 1740 to 1750. Traders, maintain your long position. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.